trying to push your required distributions back as far as possible is the exact opposite of what you should be doing, right? Smart tax planning is all about saying, hey, wait a minute. How do I best manage my 401ks and IRAs? How do I determine when, the timing, when should I pull this money out so I pay the least amount of tax possible?
Welcome back to Retirement Today. I'm your co-host, Zach Holcomb, and alongside me we have Michael Reese. He's the founder of the Prosperity Planning System, certified financial planner, and president and CEO of Centennial Advisors right here in Austin, Texas. On today's program, we've been talking all about potential tax changes coming from our government and how it affects you.
Yeah, that's right. Every time you say that, government, government's such a nice word when they're really just, what's my word of the day for them?
The weasels.
The weasels in D.C. Yes, politicians. Anyway, so here we go. We've talked about step up a basis at death, right? And just a quick recap, that means that right now when your parents pass away, they leave you a house, they leave you stock, whatever it is, you get what's called a step up a basis, which means that you receive that asset at the value that it was for whatever it was worth at the day you received it.
Yep.
Right? So when you sell it, you really don't owe a lot of taxes if you sell it right away. That's step up basis. I want to get rid of that, that'll affect pretty much anybody who inherits money. We talked about 1031 exchanges, right? 1031 is where if you invest in real estate, you can sell real estate. And as long as you invest in new real estate, you get tax benefits for that. Now, by the way, whether or not that's, the way I look at it, it's like I just want a simplified tax code. I think we should be able to fill out our tax return on a postcard. I think we should have just one flat rate for everything, and it should be a lower rate, not a higher rate. But silly me. If I were a politician, that would be a horrible idea because then I don't get to feed my special interest groups who give me money to get elected, and that's all I care about.
Right.
But anyway, if you're a politician, you don't care about what's right for the country. You only care about what's right to get you reelected. With all that being said, lots of ways we're talking about changing the tax code. But what I want to do in this last segment is I want to talk about, again, the average person. Think about, if you're an average person, what's going on? You've probably been working for a number of years. You've probably been saving money in your 401k, 403b, IRA, that kind of thing.
That's what we're told to do.
That's what we're told to do. Right? That money's been growing. And your hope is that someday you'll be able to have enough money in those accounts to make work optional. Right?
Yep.
Prosperity planning is all about helping you not just make work optional, but helping you to make smart choices with your money, whether it's from an investment perspective, an income perspective, a tax perspective. But let's make those smart choices so that your money supports the life that you want. That's what prosperity planning is all about. And it shouldn't matter what the stock market does, good or bad, your money should be there to support you either way, right? It's pretty hard to do that when the IRS wants to come along and take a big chunk of it.
Yep.
So when you are putting your money in things like 401ks and 403bs, etc., for a lot of people, what's happening, if you're like most people, you're building up these accounts. Next thing you know, you're getting ready to retire, and you got a boatload of money in these accounts that have never been taxed.
That's a problem.
And you're thinking, that'll be okay, though. Because, Zach, it's going to be fine. Because I'm going to be in a lower tax bracket.
A misconception.
In retirement. I'm going to be in a lower tax bracket. But are you? I mean, think about it. If you want work to be optional, it means that you probably want to maintain the same standard of living. You just don't want to work to do it.
Yeah, you got to have the same income.
Which means you need the same income. And your kids are grown, so you don't have those tax deductions anymore. Those little tax deductions running around the house. Mm-hmm. And no grandchildren, no count. Your mortgage might be paid off. In fact, heck, with the standard deduction raised, probably not writing off a bunch anyway. So guess what? You need the same level of income. Your taxes are going to be probably pretty close. But it gets worse than that. Because on top of all of that, you have with IRAs and 401ks, you have something that no other account has. No other account has this. I've heard different publications like Forbes and Kiplinger, they call this the weapons of tax destruction, right?
Okay.
You know what I'm talking about?
It's a Roth.
No.
Not a Roth?
Required
RMDs,
minimum distributions. See, the way it goes right now is when you're 72, you've got required distributions.
Right.
And so many times, it doesn't matter if people are in a position where they're forced to pull out more money than they want to. And maybe you don't need to when you're 72, but by the time you're 75 or in your 80s, holy cow, especially in your 80s, the percentage you got to take out is so high that it's very, very common that you're forced to pull money out you don't want to pull out. And it's like, I want to pull out 30,000 for income. And they say, tough, you got to pull out 70,000 for your required distribution.
Right.
And you got to pay tax on how much? 70,000.
Yep.
Right. And so what they're doing here, here's part of what they're talking about, right? They're basically saying, oh, we want to push required distributions from 72 to 75. And you're thinking, well, that sounds like a good thing.
Right.
No, it's not. It's actually worse for you. Because you know what happens is that means you just defer your money longer, so the pot gets bigger, so your required distributions are bigger, which means more money goes to the IRS. I mean, trying to push your required distributions back as far as possible is the exact opposite of what you should be doing, right? Smart tax planning is all about saying, hey, wait a minute. How do I best manage my 401ks and IRAs? How do I determine when should I pull this money out so I pay the least amount of tax possible? But what do they want to do? Let's back up. Let's make it big. Let's make it 75 instead of 72. And you might think that's good. The only way it's good is it gives you more time to do Roth conversions, but only if you're paying attention. And what it really does, it puts more and more money in these accounts. And don't forget, after you die, your kids only have 10 years to pull it out. So let's say you build it up, you got $1.5 million in that thing, and then you die. Now your kid's got 10 years to take that out. That's $1.5 million taxable to the IRS that's got to come out in 10 years.
Yep.
You know what that is? That is the IRS being one of your biggest beneficiaries. That's what it is.
It's not good.
Every time they turn around, they're trying to tax the little guy more and more and more. They tell you we're only taxing who?
The rich.
And who are they really taxing?
The average Joe.
They're taxing everybody, man. Everybody. It's a bunch of hooey. And you know what? The rich people, the ones that they say they're going to tax, guess what? The wealthy people, they all have really super smart advisors. Like all day long. I talked to somebody the other day, and they've got like $30 million, right? And here's the thing. If you got $30 million, you got people lining up to talk to you to help you with your taxes.
Yep.
I was just one of like 7 people they're talking to. And, but you know what? If you got $30 million, you can also pay someone, $40,000, $50,000 a year to help you with your tax plan because it's worth it. Well, what if you don't have 30 million? What if you have 300,000 or 3 million or somewhere in between?
Yep.
Who do you talk? Who do you talk to now? And quite frankly, that's why I'm doing this event. I'm doing this event tomorrow because I want to help the average person get the same kind of tax planning help that the $30 million guy gets. Because you know what? The $30 million guy is not going to pay these increased taxes. You are. So let's help you get the same help that they get. I want to help you understand what's happening, what they're trying to do to you. I want to help you understand how it affects you. And then I want to help you figure out, hey, here are some strategies you can employ to avoid these taxes legally, just like someone with $30 million can.
Yep.
So, Zach, tomorrow night, I know it's tomorrow night, 6:30.
Yep.
Start 6:30 sharp. Let's give everyone the details. I'm telling you what, if you're worried about taxes that are coming your way, you gotta be there. Fill us in, Zach.
I'm excited for this, Mike. So tomorrow night, we're hosting Retire Tax Smart at the Movie House in Northwest Austin. It's right off 620, across the street from Concordia University. Again, it's at the Movie House and Eatery. starting at 6:30 p.m. sharp tomorrow. Now, to sign up, there's 2 different ways you can do this. You can go to taxfreemovie.com. Again, that's taxfreemovie.com. It's got all the information on that website in a very simple form you fill out. Fill out that information, boom, we'll send a confirmation right your way. Now, if you want to call us, you can reach out to our office. Now, it is after hours. You give us a call at 512-265-5000. Again, it's 512-265-5000. You can just leave us a message and say, hey, my name's Joe, and I want to attend Retire Tax Smart tomorrow night. What do I need to do? And we'll give you a call back first thing tomorrow morning and get all that information your way.
Yeah, and in all fairness, a couple things I want to say about this. The cool thing is, Movie House and Eatery, it's super comfortable chairs. You just come in, make sure you come early. You want to be there by like 6:15 for sure. Get some popcorn. I guess popcorn and drinks are on us.
They are on us.
Not
yes.
like, adult beverages,
Yes.
just soda. But anyway, make yourself comfortable. Grab a seat. Now, seating is limited, so it's like first come, first serve. So sign up right away. Call us right away. And hey, you might be sitting there and you might be saying, oh my goodness, this is for me. I need this information, but you can't come tomorrow night. Something's already on your calendar. So Zach, what happens if I'm that person?
Hey, if you just need help on some of this information we've shared, you can give us a call here at our office at that number I just shared, 512-265-5000, and just leave us a message and say, what you need help with, and we'll connect you with one of the advisors here in our office.
So there you go, folks. Taxfreemovie.com, or you can sign up there, or you just call the office, 512-265-5000.
Got it.
Hey, this is going to be a great event tomorrow night. I hope I see you there. And hopefully I didn't go too crazy today on talking about weasel politicians, but there you go. That's our message of the week. Folks, I hope you enjoy your week. We'll talk to you again next week. Take care.
Hi, and thanks for checking out Retirement Today. If you like the content we share on our channel, make sure to like, comment, and subscribe so you can stay notified about all of our latest content and videos. Be sure to share all of our information with your friends and family as well. Thanks for joining us. We'll see you next time.